kind of a
Yeah, but this attendance has always been little tough these days with IPL, and I don't know, maybe there
Yeah,
is
no
some board
problem. No
exam
problem.
also, I think.
No problem. Can you give me screen share?
Yeah, I have made you a co-host, so I guess you're also there. Just to introduce Arvind, he is a alumnus of Wharton and IIT Kanpur and IIM Ahmedabad, and he has been in the technology space for almost 3.5 decades, and is one of the charter members of TIE, which you all must be aware of. And he has been doing stellar work in IoT and helping a variety of organizations start government and various other players in the ecosystem. As you know, this crypto has been one thing which is baffling everybody and intrigue. It is a matter of intrigue, and many people think it is, bonsai or other Ponzi scheme, and we don't have much knowledge of what is the technology backing it, whether it will sustain, how to make money, all those kinds of things. Although you hear of so many success stories, I mean, success means making money. So I thought, Mr. Ramchandran had requested that we will have a session by an expert, and I couldn't think of anybody more, qualified than Arvind. He has been, he knows the technology end very well, so he jumped into it right at the start. So made a neat packet for himself. I thought I'll invite him to share his story as well as some basics, as well as some assurances on what is the technology behind it and how to make money, how to trade, etc. Arvind, all over to you.
Thanks. So I will be using a presentation which I presented on 6th May at the Bangalore International Center, but I will adapt it for you and feel free because for adults it's very difficult. It's a very broad topic, very deep. So it's more a question of your interest. You can ask questions. I am happy to take questions in between. This slide, I can talk for about an hour, but that's not my intention. About 30-35 minutes is the main conceptual thing, and we will take questions, and based on what you are asking, we will drive from there. Is that fine?
That's fine. Yeah.
Okay, so I will cover the infamy because any disruptive technology is dismissed. People laugh at it, it doesn't work. Then there are reputational risks like BitTorrent came, there's a lot of reputation, but all streaming now happens in the same BitTorrent technology, content delivery network, etc. Then I will talk real life usage. We are all aware of price going up, but that's not the main excitement. Main excitement is business models. It's very disruptive to intermediaries. Banks will move to a bankless world. So just like in digital media, newspapers, etc., have had issues, banks are going to face tremendous disintermediation through crypto. We'll talk a little bit about Web 1, Web 3, blockchain, and then this is the main issue, different ways about thinking of cryptos as countries, as operating systems, as cities, as different consolidation financial statements. The rest is all question asked. Now, the important thing to understand is crypto is high tech in the sense it is the leading application of high performance distributed computing. You know about high performance for meteorology, weather forecasting, but they're all centralized. They're all one server, Amazon, etc. Here we are talking of thousands of high performance computing. Bitcoin runs around 30,000 nodes, and performance, it's 99.99%. In 13 years, Bitcoin has had only downtime of only about a few minutes. Ethereum from 2013 has not had a downtime. So very high performance distributed computing. It's based on cryptography. It's a trustless model. There is no trusted third party. You don't have to trust anybody. It's cryptography. It's game theory. There's nobody to catch you, put you in jail, etc. All that. It's jurisdictionless. It's 24/7. In crypto, it's the wild seas. So game theory and finance and code is law. If the code allows, it is considered legal in a crypto sense, not in an economic sense. There are people who decry it. Charlie Munger said, and Warren Buffett said, and of course, Balaji Srinivasan, and you can read it, A Bitcoin is Civilization. I will have one comments, and I think this will summarize my point of view. Warren Buffett recently talked about $25 for crypto is too much. He will not pay, which is fine. That's his opinion, and he has made a lot of money, 91-year-old. One has to give a lot of value, but I would like to use two adjectives. Elon Musk is the Doge father. Doge is a cryptocurrency. which is a shit coin, which everybody thinks is useless, but it is the 12th largest market cap. And Warren Buffett is a yield farmer. Warren Buffett buys value firms. He earns interest from it. He's an yield farmer. He is not a market cap driven guy. And the important thing to understand is in one single year, a disruptive fellow like Elon Musk, who has Tesla, who has SpaceX, who has Neuralink, the boring company tunneling, has added more market cap than Warren Buffett has added in his lifetime. That should tell you what the game is. And I summarize it here. In agri economy, a big landlord used to have 100 hectares, 30, 40 farms, villages, and he would be a Lakpati. So Lakpati was a rich guy in agri economy. When you went to factories, it had to be a crorepati. When you went to post-industrial economy, which is IT, etc., a rich guy is an arapati. A lot of salaried guys make crores. A lot of executives are paid crores. And in crypto economy, it is kharapati. So the valuation that is the wealth marker completely goes up by 100 times as you switch models from agri to industrial to post-industrial to crypto. So if you tell an agri farmer that a guy works in Infi, he has no land and he doesn't do any farming and he earns 100 times what you do, he will think it's a Ponzi scheme. It's useless. It will crash. You have to have land. And that is exactly what Warren Buffett and Charlie Munger's point of view is. We will see. Our RBI governor said it has no tulip, etc. So this is a desk of crypto. It goes on. And the best summary is John Authors. He is Financial Times, the UK, and he is Bloomberg Opinion. He summarized it well. He says it's not a bubble. It's an epidemic. No bubble goes up and crashes and rises again. All bubbles, once they crash, they're done. There is a website, 99 Bitcoins. There are 401 attempts by some like Jamie Dimon, Charlie Munger to call it as a dead crypto is gone. And it has kept on going up and up. Bitcoin has never had a fall below its previous all-time high in the cycles it has. We are in the fourth cycle. It touched 68,000. The previous high was 22,000. And it typically falls by 90% first time in 2011, and about 60% in 2017, and it will probably fall about 50. It is already about 50% now. So it falls, but it goes up again. And if you invested in it long run, it has been the best performing asset that you have ever seen. And that's what gets people upset because they see it's a Ponzi. Let's turn to unit of account. And if you have learned economics, Samuelson, what is currency? It is a function of fiat means issued by a government. That's all. Bitcoin is not issued by a government, so it's not a fiat money. Unit of account, medium of exchange, store of value. The confusion is with store of value. And in a depreciating inflationary economy, a currency cannot be a store of value, and I will explain that. If you are an Indian, you will use Indian rupee as a medium of exchange, a unit of account. If you are in USD, you will use USD. Crypto is multi-currency. Each coin is multi-currency. So we use Bitcoin as a unit of account. We measure my crypto portfolio, I will measure as in Bitcoins. I won't measure it in US dollar or rupees. Some will prefer it. The idea is you should measure with a productive asset. So take Nifty coin, which is 1 trillionth of the market cap of Nifty 50, which is about 250 rupees. That is your unit of measure. If you use INR or USD, you are going to lose money. And I will explain that a little later. The words legal tender, money, and currency have different meanings. Money is never issued by a government. Any society can exchange values, barter. You can use cowrie shells, you can use Facebook likes, you can use LinkedIn likes, you can trade postal stamps, antique cards. So money is exchange of value. It has nothing to do with the government. And barter is always available within willing parties. I don't need the sanction of a government to trade Bitcoin with something else. I can sell a house, buy, unless the government puts a law like hashish or opium, you may not be allowed to barter, but otherwise it is perfectly legal. A legal tender only means that I can pay taxes in it. The government and any creditor has to accept a discharge. So if I have taken a loan from a bank, I can't force him to take Bitcoin. It's not legal tender. But if it's legal tender, I can give him 1 rupee coins. I can actually take a sack full of 1 and he has to accept. He can't deny. So legal tender is obligatory for a creditor to accept discharge. A currency is a creditor. The RBI or the government is a creditor when it gives you a currency, and its willingness and ability to pay is the value. As Afghanistan found, the Central Bank of Afghanistan found $7 billion in the Federal Reserve was taken away by the US, and they're going to give it to NGOs. And Russia has found that its reserves are frozen. So currency is not yours, as they say. If you don't hold it, gold is not your own. If you don't have keys, crypto is not here. So this is what we mean by trustless. We don't trust any third party to hold assets. The fundamental philosophy in crypto is it's not an IOU, it's a money, and it cannot be taken by anyone away. And at some stage, I would recommend you Elaine Allen. She is a very good financial analyst. She has written a book, a long article, What is Money? It's one of the best explanations of the issue, the philosophy. And if you like Ray Dalio, Bridgewater ka CEO, LinkedIn पर है, Why Nations Succeed and Fail. It's a fantastic series of articles he has written, and I would recommend you guys if you're talking about philosophy of money and currency. Now, what is store of value? Typically, you measure in USD, then USD is stable. If I measure in Indian rupees is stable. But if you want store of value, you have to use a different unit of account. If I measure US dollar in gold, since 2020, it has fallen by 80%. Is that a store of value? Gold was a better store of value. If you take Turkish lira, in December, it fell by 50%. If you take Sri Lankan rupee, it fell. You take Reliance shares. This is in April 2020 when Jio, etc. got investments from Facebook. Reliance shares went up by 170% in 112 days. This is volatility. This is Apple falls by 50-60% in a year. Amazon falls by 30-40% in a year. So stores of value are volatile. It's a feature. It's not a bug. So please disabuse yourself of the notion that Bitcoin is volatile, so it cannot be a store of value. There is no store of value which is not volatile. Volatilities may differ. That's a separate issue. Now, you don't buy coffee with Reliance or Nykaa shares. So I'm not proposing that you use Bitcoin to buy coffee. That is just a ceremonial. It's just to get you the money. You take your wealth and you park it in different ways. You may have a house, stable, but very illiquid. It will take 3 to 6 months to sell a house, and you will pay some taxes on it. You may have some shares, and typically T+2, and if there is a holiday in between, within 4 to 5 working days, you will get the fund. You may put fixed deposits with your bank, and typically within 10 to 15 minutes, you can cancel the bank. There may be a penalty, and you get it. You can hold it in gold, art, wine, speculative assets. But typically, most of the cash you want to spend, you will keep in a wallet, a Paytm or a Square app, etc., Cash app, and you will transfer from your bank to the Paytm wallet or the PhonePe wallet, and you will transact. That's what we are talking about crypto. So Chai is a South Korean app where you can transact with the Luna, and then you have Jack Dorsey, Strike. They're all proposing. There's a Lightning wallet network, wallet protocol. So you transfer Bitcoin to the Lightning wallet. It's a one-time transfer. It will cost you some money, maybe $40 or this thing. And then you can transact with the rest of the world. You can pay in fractions. You can pay 5 paisa, 100 paisa, 5 rupee, 10 rupee, and it will cost you in cents, and it will be very fast. So that's the idea. The idea is that just like you use Visa card, you can go to Vietnam or Cambodia and buy something. The merchant there doesn't have to know that you are paying in US dollars. Visa will transact. Visa will deduct US dollar from your bank account or Indian rupees, which you will pay in the wallet, and it will pay. So the guardrail, the financial guardrail here is US dollar. It could be replaced with crypto, with Bitcoin. That's what Ripple does. Ripple does it for interbank exchange. So that's the idea. These are some readings which I will skip through. But Vitalik Buterin is the Ethereum co-founder. 1st April, he wrote a very good article in defense of Bitcoin maximalism. It would be a good idea. I mean, it's well written. Real usages of crypto. First of all, it is deregulated. Think of it more as a forex market or a bonds market. There is no centralized exchange for forex. There is no centralized market for bonds or OTC, over the counter pink stocks, etc. There are about 70,000 bonds across the world, different companies, different tenors. So similarly, crypto has about 13,000 coins and about 599 exchanges. So it's a very large, diffuse market. When we say altcoin, normally we exclude BTC. This is the symbol for Bitcoin and Ethereum. Dollar means it's a crypto, Ethereum. And you have L2 rollups, and these are the 100 blockchains that are there. So Flow, for example, is a blockchain developed by NBA, and that is the top gun NBA NFTs. Polygon is an Indian company which is now about $8 billion in a year. So it is a unicorn, which people don't realize. Ethereum, of course, is the main one. These are programmable blockchains. And you can find that in CoinGecko. It's a Malaysian vendor, but it's a very good site. If you look at a ticker, this is like you look at Google or you look at Tata Motors, Tatamo, when you are trading. So there is the ticker, BOJ, and it will tell you which blockchain it is based in. This is on Binance Smart Chain. It's not on Ethereum. So different. This is similar to finding some stock is only on BSC and it's not on NSE. And similarly, in the US, you have many exchanges, and New York Stock Exchange, NYCE, and some stocks are not listed on all. And this is the details about the coin. You can find where can you Reddit, Twitter, Facebook, where can you do social links, etc. And these will be some statistics. The important thing is all-time high, all-time low. The important thing is volume to market cap. If the market cap is functional, I can have just one coin, I transact, market cap can go up. But you have to look at the liquidity. If the liquidity is not at least 1% of market cap, probably the market cap is fictional. No need to worry about it. And you have different types of, like you have bonds, warrants, DVR shares, Tata Motor DVR shares, and you can have Google and Google L. So different prices. Berkshire have different prices. Similarly, there are coins which have different prices, $10, $100, and same coin can have immutable, impermanent. So you have to select and check when you are trading. And they can be on different networks. ERC20 is Ethernet, BEP20 is Binance Smart Chain, just like you trade on BSC, NSE, or it's a UK stock, so you're trading on FTSE in the UK, or you're trading at this thing. So that is the sort of idea. You also have a notion of wrapped coin, which is Ethereum. Bitcoin is on Bitcoin, but a lot of value when you deposit or lend is on Ethereum. So you can use a wrapped BTC. You put BTC in a proxy with a custodian called BitGo, and they will give you a WBTC on Ethereum. And you can lend it, you can earn interest about 6%, etc. So those are the things that can happen. Now let me give you some examples. VET, I talked about it in 2018. I was running IoT Next. It's a supply chain network. It's extremely popular in China. When they track and trace, whether it is mangoes or milk, etc., it's all VET. And in Brazil also, Amazon, Accenture is doing a project which is going to track mangoes. Helium is IoT network. So you can buy this Wi-Fi routers. It runs LoRa. It's a sub-gigahertz, and you are paid in helium coins, which was about 10 or 20 cents in 2018, is about $20 now, and that's the capital appreciation rate. These are all payment channels. So Tel, Koti, then these are all micro payments for phones. So Tel phones. Stellar is, in fact, they did a presentation to IMF, which is medium retail. Cello is retail. In fact, Deutsche Bank has adopted it. It's the first blockchain with phones. So your phone number acts as the key, and it runs off your phone. It's a blockchain on phones. Ripple is a very large player for interbank payment. It's a competition to SWIFT. A lot of South Asian banks use it, and in fact, SEC has a case with it going on. Everybody suspects Ripple will win. and Ripple is fairly large. Audio, Rally, Gary, these are creator economics. Audio is like Spotify. You can stream music for it. You may pay on your credit card. You won't realize, but it's a crypto inside on the Solana network. The important thing is, and for Rally also, that the creator gets a large share. If you have album, and typically the artist will get only 5 to 10 cents for a dollar you pay, because a lot of things are taken by otherwise. In these types of crypto economies, and Gary is an Indian exchange which has launched recently, the creator will get between 70 to 90%. And that is the difference, that the creator gets a substantial, the intermediaries have a huge margin compression. That's the problem banks have. That's why RBI and banks will badmouth crypto, because their margins will be cut by 80 to 90%. This is BitTorrent. This is Theta is for video streaming. Render is for GPU. So if you have an NFT, you want to render in 4K, three-dimensional, you don't want to pay Amazon, and that centralizes you. So you render is a shared, people rent out their GPUs and it will render it for you, and a very small amount of money. Chillage is a fan club. All the British fan football clubs are using Chillage. So you have a sports fan club, big celebrity players have their own NFT clubs, which is all based on Chillage. This is storage. So instead of storing it on AWS or a warehouse, Amazon, and you have to pay every month and it can disappear if you don't pay, you can store. So for example, Filecoin is very large. NFT data can be stored on it. It's much cheaper because Ethereum is very expensive. Arwave promises to keep your data for 200 years, Sealcoin, all these are storage things. Then there are games and guilds. Axis is a Vietnam company which developed it, and it is enormously popular in Philippines, in Brazil, etc. About 300,000 people play it, and they earn more money than their salaried jobs during COVID. It has a run rate of $1 billion. So it's a serious thing. And Gala is a game studio, Omicron. These are very serious gameplay, and that is what drives the metaverse idea that Mark Zuckerberg has. These guys are Mark Zuckerberg. So Sand and Meta and Mana are the metaverse guys. These are games and guilds. IndieGG is a guild, so it trains people to play. It lends money. It's like music, you have a master who trains people, etc. So these are yield guide games, indie guide games do it. GFI is Goldfinch. It gives loans to BPL. So you put in crypto, it will take a portion of it and give it to real life people, and it will recover, and you will earn some interest. There are certain risks, but it manages that, and that's it. So New York Times had a very good idea, Latecomer's Guide to Crypto, and it sums it well. There's a lot of goof, there's a lot of scams, all that is there. In the gold rush, all sorts of problems are there. But it's an
Arvind, just maybe I think it's going a little above my head at least. I don't know about the others. Probably if you can take us from the known to the unknown. Who typically issues this coin? What's the backup?
Anybody can issue. You can issue for $10.
Okay. How does it get managed? If I can issue, I can keep on issuing,
Yeah.
and garner.
I'll cover that. Dogecoin has an inflation of 10%. Not a problem. I will cover that.
Okay. And what is the control on me from over issuing and profiting from the?
So how can you overissue? Somebody has to buy it, no? So you can mint, but the RBI can mint as much currency as it wants. What is the control on RBI? Hyperinflation. It's a currency. RBI, Fed has printed $25 trillion. Kya control hai? During COVID, the total debt of the US federal government, state governments, and municipalities is $25 trillion. So what is the control? These are questions which you are unnecessarily asking because you are used to central banks doing it. And that has not, the US Fed hasn't collapsed. China hasn't collapsed. All the federal governments issue currencies for, it's just adding digital things. So we will come to this. But it's a set of technological movement whose goal is nothing less than a total economic and political revolution. Just like publishing. bloggers, video things. They don't need to be the Hindu or licensed by the government to be a blogger. The claim here is there is nothing intrinsic about currency and money. Anybody can issue, anybody can create a market, and we don't need banks. And this is what disrupts, this is why people get upset, and all your questions are valid. I'll come back to that. There are certain words, not gonna make it, we all gonna make it, do your own research, hold on for dear life, don't sell when it falls. You can see that. Okay. Now let me come slightly to the Web 1, Web 3. We are used to the internet. It's a decentralization. In the old days, you needed an IBM host mainframe to set up an account. Today, you buy a phone, you're connected, you can set up a web server very easy, you don't need much things. And it's based on cryptography, and it's cryptographically secure. You have thousands of nodes doing it, so it can withstand a nuclear attack, just like the internet can withstand. Crypto is designed to withstand state-sanctioned attacks. China has tried to shut it down, and every time Bitcoin goes up. 2013, 2017, 2020, 2021. So this is designed to withstand state-based attacks, and it's very high degree of technology to make it happen. No trusted third party. It can also run without computers. This is an surety.com has been running it in printed form on New York Times since 1991. This is the technology stack. The bottom layer is hardware, hash functions, data blocks, digital signatures. Is a network. You can do it over satellite. It doesn't need the internet specifically. There are ways of running it over other things. This is where most innovation is happening. How do you get thousands of people to agree? Malicious actors, fraud, how can you do it fast enough? How can you handle thousands of transactions per second? There's a lot of innovation happening. And Byzantine fault tolerant is a common game theory. This is 1891 game theory. How to handle malicious actors when they are attacking something. You can give incentives, just like the government of India can give trade promotion zones, software trade zones, you give tax debates. Chile gives money, Singapore gives money. Singapore can give $2 million to startups under certain condition. So blockchains can give money for you to set up activity, a company or a protocol, and you can distribute. Every Bitcoin miner gets some money, and you can get interest, etc., which is what countries do. Contract layer is the programmable thing. You can program a lot of things, and this is the application layer. Important thing is it's probabilistic. Bitcoin, it needs about 6 blocks, which is about an hour to confirm. Ethereum needs about 7. Some blockchains are deterministic, but most are probabilistic. These are some readings, which is okay. Now, the important thing to understand is, unlike a tax, which a country charges, in blockchains, you pay by fees when you do a transaction. In 2-to-1, Bitcoin miners earned $15 billion in revenue. On a market.
One of the questions in the chat box is what is mining and how it is done.
Mining is the process, just like RBI can mint rupees, no? They print rupee, and now they can just add it on the bank's ledger. You don't need the physical rupee. So mining is a process using proof of work. I explained the different consensus. There's a proof of stake and proof of mining. Proof of stake uses validators, proof of work uses mining. It's a process by which they solve some puzzle. Among thousands of nodes, one guy will win the puzzle, and he can then create 4 or 6 new Bitcoins. And that's controlled by algorithms. That is called mining. And Ethereum allows about 23 Ethereum coins to be mined per block. And the numbers will change over time. So Bitcoin adjusts. If there are many people trying to mine, it becomes more difficult. If some people go away because China blocked, it becomes easier. So it is a control on the inflation rate of the currency. RBI can decide how much inflation it wants, but in crypto, this is algorithmically controlled. So Bitcoin has a deflationary economy. Every 4 years, its inflation rate falls by half. Ethereum gave $15 billion in fees. So miners, validators, etc., are like the police and the army protecting a state. They protect the network, they protect the hardware, they withstand attacks. So they are paid from the taxes collected by the country. Does that
So
help?
in Bitcoin, whenever you transact, there is a transaction tax.
No, that a transaction fee is very small. Transaction fee will be about $20 to $30 max. It will be less also. The real income, real earning is when they issue new coins. This is called seniorage. How does RBI give 60,000 crore? Because it creates new coins. Its cost of creating a rupee is marginal, but it can issue a lot of new currency, and the difference is seniorage, which it gives us dividends. So seniorage is what drives Bitcoin, Ethereum, because the algorithm can create new Bitcoin at $30,000, and that's out of thin air, just like RBI and federal create thin air currencies. Can I go
So
ahead?
the that fees or whatever goes to the person who mines it successfully.
No, no, there is a division. It goes to different types of people. About 70% will go to miners. Certain blockchains, it will go to the developers. Developers also get a share. In certain blockchains, it will go to a foundation. There's a foundation to protect, defame, etc. So it depends on each chain has a different way of circulating. But about 70% will go to the security services. So miners, validators, guardians of security of the country, they will get about 70% of the revenue.
Okay.
Who holds the hardware?
The miners.
Mine.
Miners, validators, and they will run. So Solana, which is very popular new chain, has 1,500. Bitcoin has about 40,000. Ethereum has about, it will go to about 2 lakhs by end of 2022. So these are all distributed all over the world.
Is there any cap on the number of bitcoins to be?
Yeah, Bitcoin has a hard cap, 21 million, and it is 80% is issued. But Ethereum doesn't have a hard cap. Solana, Dogecoin has no hard cap. So different chains are different. Bitcoin has a hard cap, and it's a deflationary economy. I'll cover that if I go forward. So there are different ways of thinking. Every model has pluses and minuses. No model is perfect. One model is to think of blockchain as nation states, geographical units, and they have a set of nodes as resource, typically between 1,500 to 40,000. It can print its own currency. Dogecoin is inflationary, 10% a year. Solana, Ethereum, BTC is different, Bitcoin. Taxes, we have fees. Security, miners, validators, guardians, they are paid a part of the fees, and fresh minted coins. You can have inflation when you issue new coins, deflation when you burn coins, like Binance Smart Chain and Ethereum. They every year, every quarter, every day, they burn the fees they have collected, some portion of the inflation that they have created. So they're all moving to a deflationary regime, which is very different than the Keynesian economics you're used to. Crypto is adopting Austrian economics, deflationary. It's a very different mindset. And you can have startup protocols. So for example, Near, a blockchain, is giving $300 million to companies to do. Binance is planning to give $1 billion over the next 2 years to companies with startup applications, protocols on the Binance smart chain. And seniorage for coin. So the risk-free rate in Ethereum is around 6%. What is risk-free rate? A share of the transaction fees being distributed to miners, and miners have to put in some amount of money, stakers, validators. In Bitcoin, it's permissionless. Everyone can be a market maker. You can delegate some money. You can buy mining contracts for $100, for $1,000. You can be part of a miner pool for $100. You don't need $5 million. So this is very, very democratic. And you will earn about 6% on Ethereum as of now. So the risk-free rate in Ethereum is 6%. The risk-free rate on US dollar is about 1%. And that's what drives a lot of the economy. The important difference is tokens are used by companies. The blockchain, which is a nation, that has its currency, like rupee or US dollar. Every company has its own shares. They are called tokens. The difference is when you buy services of Reliance, you pay in rupee. But in crypto, you will pay in Geocoin or Maruti coin. All startups, all companies have their own currencies, and you have to buy or sell their currency when you use exchange. So it's a very multi-currency world. And it's very different than the normal model you have. The currency, coin of the currency value will depend on the country they are running in. So an Ethereum startup like Uniswap, the Uniswap price will depend on Ethereum. But if it's a pancake swap, which is in Binance, it will be cheaper because pancake swap is a much cheaper country. And there are trade zones like Cosmos. Cosmos is like Linux. It has a lot of people using the software, and you have Solana, etc. They have treaties. The blockchains have treaties. They will honor some transfers, etc. So that is one model. Can I move ahead to the next model? If you are talking of currencies, the tax rights of a country underpinned by GDP is the value of the currency. And value is different than its medium of exchange. Par value can vary. So if you use traveler's check, you may not get par value if you go to a strange country. Your par value may be less. Interest rate is fundamental to your economy, macro deflation. Forex rate depends on the economy, just like Indian rupee to US dollar, same way Bitcoin to Ethereum, Ethereum to Solana, Ethereum to USD, this is Forex rates. They do not reflect the value of Ethereum, they are the market factors. Price of a commodity in hard assets, etc. is there, and there is a spread. If you do a very large transaction, typically in an exchange, the market will vary. So if you want to sell 1,000 crore of gold, the gold prices will vary that day. The retail market can't handle that value. And there is a very good article. This is from Zoltan Postar. It's recent. It's very highly talked about, IMF, etc., who talks about Bretton Woods 3. How future currencies, fiat currencies, which are not backed by US dollar or gold, have run out of their room. The current inflation that you are seeing is driven by too much printing. Inflation created by everyone. I mean, whether it is the European Union or Japan or China or US, everybody has printed money like nothing. And their supply chain. So this is the discussion on the hard goods that is required.
There is a query: how does a first time entrant pay for any of these coins?
Typically, you can buy over a credit card. So typically this is called fiat on-ramp, off-ramp. There is always a way to enter from USD or Indonesian rupiah or Korean won or Japanese yen. Every country, there is someone who will let you. India may be a problem here because RBI is trying to do it, but typically you can buy a small amount. And for example, Binance, you can do a Forex remittance to the Binance exchange, or Paxos, which is regulated by the New York currency regulator. You can remit Paxos USD, and then you can buy Ethereum, etc. Once you have Ethereum, you can send Ethereum to anywhere in the world. Can I go ahead?
Sure, yeah.
When you sell, what happens? Can you get back your currency?
See, it's a Forex transaction. It depends on the market where you are selling. You can sell Ethereum for Bitcoin. You can sell Bitcoin to US dollar only on currency exchanges which are regulated in US.
Okay.
And then it has to go through a US bank, which is Paxos or Tether. But if you sell under rupee on an Indian stock exchange, it will come to your bank in India. It doesn't have to go to US dollar. So the fiat on-ramp, off-ramp depends on the country. It's a Forex transaction, just like you have correspondent banks, etc. It depends on the country you're talking about.
Can you explain this
Sorry.
Can you explain this coin DCX and Walled and all? How do you enter through rupees and start trading?
I will come back to that. But let's talk about blockchains as operating system.
Okay, yeah.
So Windows is like Ethereum. There are lots of open source, lot of things. Ethereum has about 7,000 coins on it. Different companies, different protocols. It's very popular. It's the oldest programmable thing. Cosmos or Atom is like Linux. Linux is prevalent. All smart machines, your fridge, your washing machine, your Wi-Fi router, invariably all appliances are controlled by Linux, which is an open source Unix, and Cosmos is like that. It's prevalent. 70 blockchains use it, and it has open source toolkit, Tendermint, etc. Then there's Polkadot, which is like Mac. It allows for 100 blockchains. It's very controlled. It's a different architecture. So these are different things. Some are unusual, like Flow, which is NBA Top Shot. Only NBA Top Shot can only be found on Flow, just like FaceTime is only found on iOS, Mac. You can't find it on Windows or Linux. And some are available everywhere, just like PDF or MS Office. You can read on anything. Similarly, there is a stable coin called Tether, which is equivalent to $1, USDT. It's available on every chain. I mean, it's available everyone, and there are some bridges. You can move stuff. If you're using Tether, if you're smart, you can move it for free. Otherwise, you will pay some amount of money. It will take about 10 minutes. You can move it from one chain to another, just like you may have a stockbroker and you have another stockbroker. You may have to move money. You have a stockbroker in US, you have in UK, you have to move some money. This is what prime brokerage as hedge funds does. So moving money across chains is similar to moving monies across different bank accounts. It takes time, it costs money, but it can be done faster. And there's a lot of improvement. We are like in Windows 1. We are in very early stages of the technology. It requires a lot of understanding. In about 4-5 years time, it will become very, very smooth. You don't have to understand a lot of technology, just like you don't have to understand internet, DNS, everything. Your phone, you connect it on, it connects to the internet. Whether you connect through Wi-Fi or through cellular, it works. All that simplicity will happen over time. It's still early, so it's technically demanding. The next thing to think about is blockchain as cities. And this is the most powerful method because this handles congestion fee and safety. So L1 chains like Ethereum, Solana, Cosmos, Bitcoin are cities, and they have different policies and usage. Now, sometimes they get very congested, so you end up paying very high fees. Like in Ethereum, a transaction fee can vary from $1 to $250. And there are times when there was BYC app chain was being minted in 3 hours. Some 70,000 people were trying to mint. Fees went up to $1,000. So it depends on the congestion. So to offload the congestion, people create specialized townships like Disney theme park, which is the Flow, or payments, Ripple, aluminum factory, or games. For games, there's a different blockchain. This is a theme park to offload, like Immutex. Or you can build skyscrapers. So a lot of activity happens in the skyscraper. The load on the ground, like Manhattan, a lot of things happens in the skyscraper. The load on the ground, which is rollups, optimistic, arbitrum, and you can have suburbs to connect. So you take a bus to go from New York City to New Jersey, and that reduces your fee and charges. Or you can use the metro. All these things are happening. So there are suburbs, there are metros, there are bridges, and as Yogi Bharat says, it's very crowded, you don't want to. So this is the best model to think of cities. And see, why does a lot of business go to San Francisco? Why does a lot of business go to Los Angeles, California, or does it go to New York? There are different pluses and means. It depends on the businesses that are there on the city, etc. Ethereum is the most popular. Solana, Near, Cosmos are all coming up. The last thing is financial statements. RBI can tell you what is money one, money two. It knows different types of money, cash and repo, etc. And this is what blockchains do. There are two types of accounts. One is a normal account, how much money you have. There's another called unspent transaction output, which Cardano and Bitcoin use. But RBI cannot tell you how many shares Reliance has or how many shares J&K Paper has. That's done by the registrar of the company. So that is tokens. Tokens are managed by smart contracts. So each blockchain, Ethereum has 17,000 smart contracts, Polygon has 7,000. They manage the shareholders of the token. And token balances are maintained as a sales ledger. So just like in a general ledger, if you go to a large company like Reliance, you will have one line saying income. And then you will have sub-ledger saying how much is pipeline sales, how much is geo, how much is different market segments. And then you, in a separate ledger for geo or a subdivision, you will see for each customer in a separate detailed ledger, there will be per transaction. So those types of ledgers are there, L1, L2, L3, you have sub-ledgers, ledgers, etc. But all these are transparent. You don't need an auditor. You don't need anyone. 24/7, the solvency of any application, its liquidity, its fee is available. So Uniswap, which is the largest decentralized exchange, which does more transactions than Binance and Coinbase, You can see its revenue and profitability 24/7. You don't need any auditor. It's all public. So this is the important thing. Reconciliation is much simpler. There are some conceptual issues, but it is all near time. Any questions here?
Yeah, Dubai Ram, you had some question.
This is a fun tweet from Elon Musk. Dogecoin is just made up money with an infinite supply, but that's precisely what the US dollar is also. It's a paper currency, made up supply. And this is Bloomberg. They were calculating risk-free rate. They calculated that Ethereum can give around 8. They have not taken some risk, so we will reduce it to 6%. And this is the difference between risk-free rates. Can I move on?
Ram, you had some question.
Yes, just
Ultimately, this cryptocurrency has to be converted into traditional currency like dollar or euro. Is it?
Not necessary, sir. Not necessary. If there's a large enough economy of suppliers who are willing to live with Bitcoin, you don't have to convert. Indian currency doesn't have to be converted to US dollar if I'm doing domestic business. I can be in Vietnam and I don't have to convert to Indian rupees.
But with so much of cryptocurrencies floating around, then it would become one cryptocurrency versus another cryptocurrency in terms of value, right?
It is like that. It is like that. You can have markets for Ethereum to Solana from Bitcoin. If you go to any exchange, you will have, just like Forex, you can have US dollar, Indian rupees. You can have Indian rupees to Vietnam dong, Indian rupees to Scandinavian this thing. So it is like Forex.
Mhm.
So
do you get exchange rates published?
Yes, they're all, you can go to the markets, you will see the rates for different currencies. And if you go to the, see, every currency pair is not there. So you may have to do a canonical currency to Ethereum or Bitcoin to go to another currency, just like you do US dollar cross rates, cross currency transfers. But about 70, 80 currency pairs are there. I mean, you can transact European Union, EUR to Bitcoin, you can transact Indonesian rupiah to Bitcoin, Indian rupee to Bitcoin, all those markets are there.
RBI is now talking about issuing digital currency. Will there be a relationship to Bitcoins or no?
Completely irrelevant, and actually India is very foolish to issue digital currency. We have UPI, we don't need it. It's the US and European Union which need that because their payment systems are third world payment systems. It costs about $25 and it takes 3 days to transfer money. Of course, Zelmo and Memo, etc. These are apps come up by private companies. They are making it simpler, but India doesn't need it. This is all sheer being left out. India doesn't need a CBDC. India has enough, but it's there is no competition between crypto and CBDC. It is basically the central banks feeling outcompeted. When Facebook announced DM, the biggest fear was with central banks. Why does Facebook's cryptocurrency cause so much havoc? Because the convenience will take, I mean, it will suck out the volume of business from the central banks. And in fact, the Federal Reserve told Silver Bank, which was going to set up an account for Facebook, not to do it. The regulators banned DM because competition. This is a monopoly trying to preserve its monopoly.
As of now, is Bitcoin legal in India?
No, what does legal mean? What is legal? See, it's a barter. It is not stopped by law. See, if you and I agree that you have a car and I will give you Bitcoin to trade, it's perfectly legal. It's a barter trade.
Okay.
And I need to constantly look at which is the best performing cryptocurrency to keep shifting like a foreign exchange scenario.
No need. It depends. If you're a trader, you can trade every 4 hours because I will come to it. Bitcoin, crypto markets are volatile. 20% in a day is quite normal. But you don't need to do it because it's correct. So you can, this is called hodl. So Bitcoin, Ethereum, you leave for 5 years, you will see 4 times gain. You don't have to trade it every day. It depends on your horizon. So if you are a long-term investor, just take large coins and leave it. If you are a swing traders a week, you don't hold for more week. Day traders are a few hours, and crypto is very volatile. But Indian taxation will kill you. You are taxed on each transaction. So in India, you can't do any day trading.
I don't know whether I'm jumping the gun. I mean, suddenly there is a huge drop in the cryptocurrency market right now, is it not? So
It's not just cryptocurrency. Every asset in the world has fallen. If you take PayPal, Netflix, Shopify, Apple, all have fallen. Even Berkshire Hathaway has fallen by 10%. Apple has fallen by 20%. Amazon is 30%. Every asset class, even bonds, as I'm mentioning, bonds have had the worst loss in 40 years. At a 2% interest yield on the US 10-year treasury, you have a 10% fall in price. Guys are slaughtered. So every asset class, even gold has not gone up. Every asset class is being slaughtered. It's not just crypto.
that is due to the Fed hike. This is happening.
It's not just Fed hike. I mean, Fed is not all that powerful. It is a lot of factors. China property market, COVID supply chain construction, the war in Ukraine, lot of uncertainty and fear builds up, and people are trying to rush for whatever they think. I mean, take Microsoft, take Apple. These are A plus. I mean, even bonds are not rated at A plus plus. They have billions in cash. They have dividend, but they are also falling. So it's not just flight to safety. It's just fear.
So there's one warning which all the governments talk about is because there is no control, there's no, it's not visible. The terrorists and drug lords will use it. That's going to be a big social problem.
See, sir. So I will. Since you asked, let me cover this. But this is all fun. Competition nahi chahiye, so they create this FUD. 1 second. One minute. Let me get hold of my. Let me get hold of some slides to walk you through this. Can you see this?
Just coming, yeah.
Yes, sir.
So this is dark web and terrorism. There is a report by United Nations, money laundering overview, which says that 2 to 5% of the global GDP, about 800 billion or 2 trillion in current US dollars, is part of this. Okay, this is the official of fiat currencies, the standard, and most of it is in US dollars. Yeah. Chain Analysis is a Singapore-based company. It's a government contractor for this, and blockchain is all transparent. No, you don't need CIA or you don't need CBI or an RBI permission to go check. Everything is transparent. Everybody's transaction is visible 24/7, and anybody, if Vitalik has given donation of $1 billion to India, people can track it, and it's there immutable. You can't even delete it or remove it. So they do a crime report. And according to them, just 0.15% is illicit. This is FUD. Because
the government can see the transaction.
Anybody can see. It doesn't need anybody's permission. That's the whole nature of cryptocurrency. No,
they can see transactions of anybody. I mean,
anybody. And for eternity. It's not just now. From the date you started doing crypto.
But is there a mechanism of scrolling through for them to look at it?
Yeah, there are blockchain explorers. You can explore. You can do how. I mean, all the frauds, all the ransomware are found and tracked and caught. Much more. I mean, Madoff did a Ponzi scheme in New York. He was an advisor to the New York Stock Exchange for 14 years. The Fed, nobody found him. But in blockchain, within hours, it is found, and the scams are found within days. There's a lot of smart guys looking at transactions. So any bug, any scam, within weeks, it will be found and it's corrected. It's a very fast evolving economy.
Okay.
I'll give you an example. This is Signal. This is a bank which gives. So they did the risk-weighted return. So if you do BB rated, which is junk, 3.75% is the average loss rates, and 60% is the default. In crypto, they calculated that the loss rate is around 0.4%, even though they are scams, because typically protocols will reimburse you. 300 million, 600 million. Within weeks, people are reimbursed because of reputational damage. So the average yields, risk-adjusted yields are very high, and that is the competition. It is frightening the banks and central banks because this is a competition where the sovereign risk is very low and seigniorage fee is not paid to the government. It is paid back as deposits to the people who have bought crypto. So it is very, very competitive. It's very tough for them
But
to.
no, but if somebody does not honor the commitment, there is no legal action can be
What
taken,
is
right? Because
commitments? What is commitment?
so
What is
let's say, no, I say I want $1 million coin and I have to pay for it, and I don't pay for it, and I get the
You can't get. So this is the whole problem. There's no trusted third party. There is an issue
okay,
mechanism.
right?
Your currency has to go to the smart contract. That guy's coin has to come. Both have to be agreed, and then there's a time lock, and there's no third
Oh,
party. There's no human being. It's all automated.
right.
There is no way you can get an asset for which you have not paid the reimbursement.
Oh,
And
that's
once you get it,
interesting.
it's your keys. Nobody can take it from you unless they hack your keys or you share it with someone.
Okay. Yeah. Thanks.
Okay. So in terms of a portfolio, my suggestion is don't put more than 2 to 5. This is more than enough, or about half of what you would put in gold. And keep the bulk in the main coins. And right now you have a recession. It is low enough. It will probably be the bottom in about a month. Nobody can time the bottom. We don't know. But Bitcoin has never gone below its previous all-time high, which was 20,000 from 2018 to 2021. So, and it's about 28, 29. So it's close to it. Ethereum also. So you buy and hold on, large caps, and you will see like Vault is my recommended exchange I do for India. You can do mid cap slot, and some are very volatile, like Shibu Ape. Ape is a NFT coin. It listed just about a month back. It went from $8 to 26. So these things go very fast. You buy and you sell when it goes high, and you can make money. And there are baskets you can buy. So that would be my suggestion. It's very common for developers to be anonymous because they get kidnapped. In a lot of countries, in Korea, in Vietnam, in China, where a lot of developers, a lot of cryptocurrency code is in Chinese, by the way, and GitHub, I have been going through it. They will get kidnapped, they will get hacked. So people maintain there's a lot of pseudo-anonymous thing. It's perfectly normal. A lot of projects are funded by VCs with anonymous users. It's not a big issue. Just like if you go to Ajanta Ellora, you will see paintings. There's no name of the artist. That's the culture. In terms of thing, you have to understand that the ledger, just like you have CSTL and STL, there's no such thing in crypto. They're all on the blockchain. And it's just a 64-byte string, which is your account key. And the wallet which you own, you have a set of keys which will allow you to interact. Just like if you take a centralized exchange like Coinbase or Binance, it acts as a stockbroker, an exchange, a market maker, and a custodian. All these roles is there. But if you buy stablecoin like Tether, there is a Tether Foundation, which is the custodian, which keeps control of because they have the US dollar on which it is backed. So if you want to convert, you have 100,000 US dollar, you can give it to Tether, and Tether in the 3 days, you will find the US dollar in your bank. They will remit the US dollar to you. So there are custodians for stable coins like that. Otherwise, the custodian is in a stock exchange. Your keys, you can do P2P. You don't need a stock exchange to buy and sell crypto. There is something called decentralized exchanges, Uniswap, PancakeSwap. They're very popular, and you can transact. They are permissionless 24/7. They operate beyond borders, beyond any jurisdiction, beyond any country, and it's very, very popular. Reporting is poor. So normally there is an API, there are third-party software which can do it. All that can be done. So this entire portion of a normal trading exchange is replaced by the blockchain. And the US is also planning to move. In Bitcoin, in crypto, you don't have T+1. It is normally settlement happens within minutes or hour. Bitcoin settles within an hour. Solana, etc., settle within 5 minutes, 5 seconds, and most coins will settle within 5 minutes. There's no counterparty risk, there's no settlement risk, and therefore these are called alternative trading systems, just like OTC. So in the US, you have alternative trading systems where 17,000 different shares are traded, a lot of foreign shares, etc. It's something similar to that. There are 40 large sexes, 150 axes, and the central exchanges will use KYC and they follow the travel rule. So when you transfer money and all that, they will do. You have a password and you will have an OTP. Typically, don't use SMS as an OTP. Use what is called Auth2. So Google Authenticator or Auth2. That is what you use with the broker or exchange. And they will normally ask KYC. In India, PAN card and Aadhaar is good enough. International, you have to do a selfie with your ID, etc. And you will see different markets. This is Binance. So if you go to fiat markets, you can trade in Australian dollar, Brazilian real, European real, Turkish real, US dollar, Indonesian. So these are currency. You can also trade in Bitcoin. So you have all the coins against Bitcoin, all the coins against Binance coin, which is Binance exchange. So these are the markets. BUSD is a stable coin issued by Binance. It's issued in New York. It is matches to one. So you can trade Matic to INR. Matic is Polygon, very popular Indian startup. Or Matic to USD or Matic to Ethereum. So these are the markets, forex transactions you can do. You select, you transact. Most Indian exchanges are not really exchange, they're broker dealers. So WazirX uses Binance, CoinDX uses Coinbase, Gold, which uses Binance and Bitco. International exchanges are Coinbase. Coinbase has a Pro, which is cheaper, and Coinbase Retail, which is more expensive. You pay fees. Typically, you will, some exchanges will charge you a fee when you send US dollar. Like Paxos will charge $30 when you send US. Binance doesn't. Indian guys don't. When you withdraw, there will normally be a small fee. It will either be a network charge. So when you want to withdraw Ethereum, most exchanges will tag $30 to $40 as a withdrawal fee. They will call it network fee. Network fee is only about $3 to $5, but you will end up paying that. There is a swapper trading. The fees are quite competitive, typically 0.3, 0.4%. But if you're using Coinbase retail, it may be around 1.5 to 3%. But typically Indian exchanges, the fees are very competitive. You can send coins to others. You need to know the address. So you have to get the address of somebody else, your own account. You can have an account on Void, you can have an account in Binance, you can transfer. And you will normally get a hash. The sender will give you a hash code, and you can see this is Etherscan. You can see what your transaction is, when it went. You bought a token. It hasn't gone to another person, and this is the amount of fees you paid. All this is public. Everybody. So whenever you transact, exchange in which you transact will give you a hash transaction code, and you can publicly see what you have done. And normally it is pricing is in Gwei. Gwei is a billionth of a Ether, and Satoshi is a billionth of a Bitcoin. Cryptocurrencies are priced up to 18 digits. So it is very big things. And the fees vary. So when you are transferring US dollar, you use USD. If you transfer using the Tron blockchain, it's free. If you transfer using Ethereum, you may end up paying $25. This fee varies. So on a Sunday, India time, it will be cheaper. On a Monday or a Tuesday during US times, it will be expensive. So this you have to see. And you have to match the networks that both the sending wallet and receiving wallet have that. All this is up to you. And many people, apart from this, they give you interest rate. So World, you can deposit Bitcoin, you will get around 6. You deposit US dollar equivalent, you get about 12% interest. These are normally monthly fixed deposit, which roll over. You can buy mining, you can do margin trading, and you get free coins also. Can I stop here?
Sure.
Any questions, comments? Otherwise, we are done. I will not cover the rest.
Okay. How do you, what do you advise people to get started? How do
My,
they get started?
my suggestion is, since you are not going to trade actively, look at, for Raji, the answer may be different. You look at Gemini, as Gemini earn is there. Coinbase is very popular, but it doesn't earn, but you can research. But in India, my recommendation would be Vault. Vault is an exchange, it's a Singapore-based company. It has funding from Coinbase and SoftBank, etc. It's more designed for exchange. You do the KYC. It's very easy to do. Transferring rupees is a slight problem because Indian banks are trying to make it difficult. And just buy Bitcoin or Ethereum and leave it. And buy once in a while. You can do SIP, etc. This is automatic. Like SIP, you can do automatic. You can set up a limit when the market falls by 10% buy. So all those things are there, and stick to some larger coins and leave it for about a year, and then we see how it goes.
In fact, I also had an experience after interacting with them. The transacting with these people is far, far easier than transacting with Axis Bank and ICICI Bank. In fact, you can open an account in 5-10 minutes. Of course, they take their own 3-4 hours to confirm. But once it's done, it is very peaceful. And their customer interaction, bot as well as personal interaction, they are far, far more decent and polite and, to interact with.
And they
And
will,
they don't leave you until the problem is solved.
and they all have Telegram groups. Telegram groups are very common. All support happens on Telegram groups and Reddit. So Telegram groups are very popular for support. I mean, you can raise issues, you can correspond. And there is a Point Crunch is a channel in India, young guys. They are more swing traders. They are looking for trading within weeks. They are not long-term investors. Coin Bureau is a recommended channel, YouTube channel. He is paid by some coins, but he's a reasonable explanation of different coins, etc. There is a guy called Rohas Nagpal. You can look him up on LinkedIn. He's doing some basic education. Unchained is a ex Forbes journalist. She's very good. She runs a lot of YouTube channel, etc. Raji, you can look it up. She does a very good things, etc. I would keep in mind, because it is unregulated. There's a lot of price manipulation. Don't trust people when they're saying it will go up, etc. There's a lot of pumping and dumping. They will run up the price. This is what happens in this thing, dalal, no, pink slips. I mean, sub $5 trades, both all that is there. You need to watch. So just go for the bigger ones. Look at the top 30 coins. You're probably quite safe, and that you can find in one second. Coinbase, etc. You can find that in the 1 second. Let me go. So you can find them in 1 second. Yeah, you will find them in CoinGecko or CoinMarketCap. These are the two websites where you will find the exchanges listed. You can look it up online. And valuation mechanics are there. There are a lot of different ways. DCF, money flow, all that is there. Theory hai. But keep in mind it's volatile. Like this is Apple prices. Apple has fallen by 70-80% in some years. Into 2000, etc. Right now it is about 10% down. So crypto is about 10 times more volatile than S&P. So it's like Tesla, etc. Like GameStop. So it's volatile. So keep that in.
Can you also just throw some light on this NFTs? Because I believe a lot of people are kind of monetizing their talents and things like that using NFTs.
I suggest to stay out of NFTs. NFTs are collectibles. They are not really, so like you buy wine, art, postage stamps, antique cars. Their valuation depends. So certain types of postage stamps are very common. You may find a price. Certain type of statues are very rare. You can't find a price. Like a Mona Lisa, you can't get, no. So the pricing depends on how many collectibles of like wine. Very rare wine, price depends. Very common wine, branded wine, you may find a market price. So it's a collectibles art wine. And the other thing to realize is that you don't actually have ownership of anything. The photo is not yours. You only have the envelope. What is inside the envelope, the contract developer can change. It is stored on Amazon, and if the guy doesn't pay Amazon next year, that photo will disappear. So unless it is stored on international interplanetary file system or Filecoin, which you have to check, and the developers can change. So there are a lot of issues with NFTs. I would recommend you not to invest too much unless you really know what you are doing. But NFTs can also be used for SS Pass. So for fantasy sports, for example, sports club give you voting rights. So you can name a deal, you can decide who all sit on the first few rows, you can decide what the t-shirt logo should look like. So there are a lot of votings being given to people who buy NFTs of the club and engagement. Those things are different. Those are very unusual experimentation that is happening on, and those make sense.
And what is
And
this new development on metaverse? Like, for example, Emirates Airlines is now telling you can.
I think stay out of it for the next 4 years, sir. This is all hardware. People just this is like 3D TV. कितने लोगों ने खरीदा 3-dimensional TV? We don't even know if the technology will make it center stage, because you need the Oculus Club, you need a lot of things. If you want to benefit from metaverse, then there are two blockchain coins I would suggest. Look at it. One is SAND. SAND, that's the ticker, and Mana. Mana is decentral and SAND is sandbox. These are the two blockchains, and the outlier is Jilica, JIL. So these are the three coins which will benefit most from metaverse.
Is there any other questions? Otherwise, we'll wind up. I think 1 hour 20 minutes.
just one question. Yeah, there is the governments also have been talking about power, excess use of power because of Bitcoin mining.
Let me come to the power question. Let me just get that, and I will cover that. Green. But before we cover that, Rohit had a question. Rohit?
Yeah.
So the usage of crypto, we don't know. It has gone. I mean, when Bitcoin first came, there were just 10 users. People bought pizza. Now there are about close to about 400 wallets with Bitcoin and all that. So any technology, it takes time. But Bitcoin right now, NFTs are driving a lot of usage. NFTs are very popular in the US. Typically, an NFT, when it launches, the networks get Solana, Polygon, and games. Games and NFTs are driving huge usages. We have about 1 million people using crypto now. And it is expected by most people. And Fidelity has set up, Fidelity allows you to buy crypto in your retirement account and all that. So the expectation is that you will get to about 100 million over the next decade. And that will take crypto to about a 5 trillion economy. It will become very large. So there is no, and it is becoming simpler. You don't have to understand a lot of things. A lot of the wallet, the web UI is going to become simpler. So I don't think there should be an issue. Let me talk about energy usage. There's a lot of FUD as usual. This is a 2017 article, which claimed that the whole world will go dark because Bitcoin is taking energy. Nothing like that happened, because the calculation is done by a guy who is a PhD student employed by the Dutch Central Bank, and it's a total hash job. I checked it out, more than 1,000 times mistake. See, Bitcoin energy usage is done when you create a Bitcoin. A transfer of a Bitcoin is like an email. It doesn't take much money. When you issue a new Bitcoin, it takes some money. But 80% of the Bitcoins has already been mined. कोई ज़्यादा बाकी नहीं है. 18 million out of the 21 million is already done. Just 2-3 million more left, and the next 10 years हो जाएगा. 2040 we should be done. Second is, if you run EV cars, electricity doesn't come from nuclear or solar. It comes from gas. The same issues are there. If you watch 4K video, a 4K video streaming consumes more energy than Bitcoin mining, which we don't talk about. So the issue is not Bitcoin. The issue is your electricity usages in data centers should be green. And the data center uses Bitcoin for 4K video streaming, for GPU rendering, for simulation, for aircraft training. All of these use a lot more energy. So if once you sort out your green energy in electricity, this whole issue will go away. Anyway, Bitcoin doesn't use the energy these guys compute. Cambridge University ka hai. It's all total fraud. It's about 1,000 times less, and nowhere is the world going. Plus, what is happening is Bitcoin can use like flare gas. No, बॉम्बे वो हाई ओएनजीसी का गैस है वो फ्लेयर करता है इट बर्न सो दैट कैन बी कन्वर्टेड बिटकॉइन गाय विल पे वोल्केनोज में पे करेगा सो बिटकॉइन कैन यूज एनर्जीज ऑफ ऑल सॉर्ट्स ऑफ थिंग्स व्हिच आर नॉट commercially viable right now so and this is a problem market will solve you let the market solve it will go green it will become manageable.
So what do you mean by creating a Bitcoin? What is the process? Why is it consume electricity?
See, RBI
Because it's
can
only
issue,
notional,
okay, I'll explain. RBI can issue you currency by just adding it in the ledger. RBI को तो कुछ नहीं करना है. Computer system में they can add 5 zeros, 17, 10 zeros and 1,000 crore issue हो गया. Correct? So the cost of issuing a new rupee, they don't even have to print the mint coin. No, cash doesn't have to be there for the coins they
Right.
give. It is just a few paisa. So 5 रुपये में 5,000 crore RBI can print. Yes or no?
Yeah.
Same for Fed. US Fed can issue $1 trillion for just a cost of $10. So these are centralized, trusted third parties. In Bitcoin, in Ethereum, there's no trusted. Anybody can issue coins. So you don't want over creation. So there has to be a challenge. The challenge is a cryptographic challenge, which reduces the number of people who can win, who have to commit economic resources. Typically, a Bitcoin miner has to spend about 10 to 12 lakh rupees to be able to issue a block. And the block will give him about 6 Bitcoins, which is about 15, 16 lakhs. So that's the revenue he makes. He has to try to do a challenge and everybody will not succeed. There are 70,000, 10,000, 12,000 people trying every 10 minutes. So that process, because you are allowing anybody to issue the coin, you have a cryptographic challenge and some resources have to be committed to do it. And you control the number that can be issued. All algos have control limits on the amounts that can be issued. The inflation rate is controlled by algorithm.
Mr.
So the
Shailendra has a
power.
question.
Yeah, Kumar Sali, I
Yeah,
had one question.
yeah,
Talks to the side.
yeah.
What is the system of nomination in case of coins, crypto?
There is no nomination. Anybody who has the cryptographic key is the owner.
Okay.
Okay.
There is no
Last
human
question.
being, there is no legal entity, it's all program code. Anybody who has the cryptographic keys, which is your credentials for signing in, is the owner of that account. He can transfer the money.
One last question, Kumar, if you may permit me.
Sure. Yeah.
Tiwari sir, आपने बताया कि there is a finite number of bitcoins that can be 21 million or something.
Correct.
So what does that mean? I mean, once you reach that, that means no more bitcoins can be mined,
see, there are two things. One is the number of bitcoins, which is limited, but the number, but you're not limited to a paisa. You can go to a satoshi, which is 1 trillion. 1 trillion of a bitcoin is available for exchange and trading. If the price of bitcoin is 1 crore, 1 trillionth of it is 10 rupiah. So you are not limited in trading. Denomination of bitcoin is to 18 digits after the .com. So that's not an issue.
Ram, you had some query in between you started?
No, I think this was one of those questions which I asked. I mean, I think
Other Ram I meant, yeah.
Okay.
Yeah. No, it's fine. Yeah, I think I'll answer. Thank you.
Let's all come on the screen now and clap for Mr. Arvind Tiwari. Yeah. I know it's a very difficult subject and this is a precursor. And if you have any queries, please do send it to him or me. I'll get it answered. Of course, the best way, of course, is to open an account and start trading. A lot of these confusions, etc. disappear. That's what I did actually under.
अरे आप 1 लाख 2 लाख रुपया लगाइए ना, क्या जाता है? It's just experimentation.
That's true. After that, 50% of the queries disappear from your mind.
But your lakh also might disappear, no?
It's okay.
I think probably this is the best time to invest, maybe because the market is down. Maybe I'm sure it will go up.
That's right.
I have a feeling because when you say that it has never gone down below its original value, I mean, it's always keeps going. I think probably it's going down to 28, 26. So maybe that's the best time to enter.
See, any new technology has lot of worries and risks, but Bitcoin has been around for 13 years
Okay.
and has shown tremendous investment return.
Resilience.
Volatile, it falls. So, abhi 50% fall kiya. But the thing to remember is Paytm and Zomato also fall.
Just to give some, incentivizing news, there used to be one Sardarji doctor in South X. The dad was also a doctor, and both the sons are also doctors. Very flourishing business in multiples of crores they were making. I think a couple of years back or something, somebody suggested, and he had no other use for that money, so they bought. Last year in the run-up, both of them sold their bitcoins for 160 crores each. And they bought properties in the UK and migrated and abandoning their.
Yeah, so it may not go up as much as in the past because it's now much more thing, but it will definitely be a good asset class over the next 5 to 7 years. So and don't have to put too much. That's true.
So I hope this session has been useful, and all the best. And of course, he's there in case you have any queries or something. Please do send it to me. And I will also share his presentation as well as his email ID if you don't mind, Arvind.
No problem.
And you can stay connected. Thank you all so much.
Thank you.
Thank you.
Kumar, is this recorded?
Recorded. I will send it.
Okay, thank you.
Thank you so much.
Thanks, Kumar.
Thank
Thanks,
you.
Arvind.
Thank you, Kumar.
Thank you.
Bye.
Thank you. Thank you.
Thank you.
Thanks.